Today, I want to make the case for investing with Stallion Capital Management inside of the Investor First Fund. This investment is not for everyone. We limit the fund to accredited investors only. Our minimum investment is $100,000, and the average first-time investor is bringing in close to $250,000. This fund is really for an investor who has already accumulated assets and has sufficient liquidity elsewhere. You are not relying on this money to meet your monthly obligations. You likely already have capital in the stock market, maybe in bonds, maybe in real estate that you own or rent out. What you're looking for now is a great investment for the fixed income portion of your portfolio. You want a higher return than you can get from a guaranteed instrument like a CD or government bond, and you do not want to put that money at risk. You're probably looking for some diversification away from the stock market. And that last point matters. Since 2020, the stock market has been strong, especially in this AI era, but it has had real volatility along the way. This fund is for the investor who wants a portion of their portfolio that does not move with those same markets. It means not selling your other investments. It just means adding something that is not correlated to them. The guiding idea here is predictable income. The fund targets an 8.5% annual preferred return, paid monthly. That may not match the stock market in a strong year, but it's not designed to. It's designed to be safe and steady. On a $250,000 investment with an 8.5% target return, that works out to about 0.7% per month, or roughly $1,770 deposited into your account on a regular monthly basis. So what separates this from a more traditional investment? Well, two things really. First, your investment is backed by collateral. We are lending against real estate, always in the first lien position, which means that we hold the first claim on the property. Second, we keep our exposure conservative with low loan-to-value ratios on every loan. So there's an equity buffer built in for safety. That is the heart of it. A capital preservation mandate first and a solid, dependable return second. We are not trying to compete with the big numbers that you see in the stock market. This is built to be predictable and built to protect your capital. Like any investment, you can lose money here, including your entire investment. However, the entire system is designed to control risk and has proven successful in the last 2 decades in both up and down markets. There's also a potential tax advantage worth mentioning. The fund includes a real estate investment trust subsidiary, which means this type of income may qualify for the qualified business income deduction. For many investors, that can improve their after-tax return compared to other income-producing investments. How much it benefits you depends entirely on your own tax situation. So this is a conversation you'll need to have with your tax advisor. However, it is another reason investors find the structure so attractive. Now, there is a trade-off, and I want to be direct about it. This investment is illiquid. When we accept your capital, we lend it out on real estate, typically on 12-month loans. So there's an expectation that your capital stays in the fund for at least 12 months. After that, a redemption requires a 90-day written notice, and our average investor stays in the fund for more than 5 years. This is not a savings account, though. You cannot withdraw money on short notice. If you know that you're going to need this capital back quickly, this is not the right investment for you. It is best suited for investors who have some experience with alternative investments. What we find, though, is most of our investors choose to keep their capital with us for many years. The good news is that the Investor First Fund fits into the accounts you already use. You can invest with a normal cash account or with your IRA or Roth IRA. We are on the Fidelity and Schwab platforms along with several others, so we can work alongside your financial advisor to make this a part of your portfolio. So here's the opportunity. A solid, dependable return. Real collateral behind your investments to always protect your capital. Always in the first lien position with a conservative equity buffer. The trade-off is liquidity. If you have a short-term time horizon, this is not for you. However, if you can commit your capital for at least 12 months, this can be a meaningful part of your portfolio. The part that is built for predictability, peace of mind, and protecting what you've worked so hard to earn. If you have questions, we would love to have a conversation with you and walk through the specifics of how the fund works. For more information, you can reach us at stallioncapital.com. Take care.